if you really want to know what a company's thinking, you you don't look at the prepared script. You've got to look at the Q&A.
That's exactly right.
So today we are doing a deep dive into Doximity's Q2 fiscal 2026 earnings call. We're focusing just on that really nuanced question and answer session from November 6th.
Right, because that's where the analysts start poking around past the headline numbers. And what they uncovered here is, well, it's a company that's navigating all of this market uncertainty by completely changing how its biggest clients spend their money.
A pharmaceutical company.
So the pharma companies, yeah.
And our mission here is to just quickly grab those strategic insights. We need to get a handle on how Doximity is managing these budget anxieties while at the same time leveraging this massive investment in AI. Because the core insight, I think, is that their new AI-optimized programs, they aren't just generating revenue, they're actually, structurally changing customer buying habits.
So much so that it's throwing off all the traditional financial comparisons. It's a huge distinction. I mean, it's not just a product upgrade. It's a fundamental shift.
A shift from what to what?
From a cyclical, annual spending model to a continuous data-driven one. We're going to look at two numbers that really capture this. First, the incredible quarter-on-quarter growth in their AI adoption.
Okay.
And second, the fact that 40% of their recent upsell bookings came from these new integrated programs. I get this. That's up from less than 5% the year before.
Wow. Okay. So let's start right where the analysts did, with budget uncertainty. The CFO, Anna Bryson, she was asked immediately about calendar year 2026 budgets.
Yeah, which were about to be locked in.
Right. So what was causing that hesitation from clients? Why were those discussions so cautious?
Well, the hesitation really stems from this general market environment that just feels a bit more turbulent, so it slows down those big long-term decisions.
And for their clients, the pharma giants, it's more complicated.
It is. It's a mix of potential policy headwinds and tailwinds. So, for example, they might be worried about new regulations on direct-to-consumer advertising. That's a headwind.
Okay.
But at the same time, they could be expecting huge new revenue from, say, expanded drug access policies. That's a potential tailwind.
So the clients are still highly engaged with Doximity, but they're wary of committing these huge annual lump sums right now because of all that uncertainty.
Precisely. They're cautious. But the engagement is high because Doximity is offering them a solution that's built on measurable ROI. And that is exactly what you want when you're feeling cautious.
Okay, this brings us to a major behavioral shift that the CEO and CFO spent a lot of time on. The slow structural death of the budget flush.
Ah, the infamous budget flush. It was for a long time a constant in the industry. It just meant clients would hold back marketing dollars and then, deploy this huge lump sum, the flush, in the last couple months of the year.
Just to hit their annual spending targets.
Exactly. And that created this massive, totally expected spike in Doximity's revenue between Q2 and Q3.
And now that historical spike, it's starting to go away. And the company says it's because of these new integrated programs and the client portal. So what do these integrated programs actually look like? Is it just a bundled subscription or something more?
It's definitely the latter, and this is so critical to understand. An integrated program isn't just a bundle. It's an AI-optimized, multi-module offering where the client commits a larger continuous budget.
And the AI optimizes it.
Constantly. It optimizes how that money is spent across all their different channels, video, newsfeed, workflow tools, all to maximize the clinical impact. And because they get immediate transparent ROI data from the client portal, the customers have conviction much earlier in the year.
So instead of waiting until December and panicking and flushing the budget, they're seeing the value right away. They know it's working, so they're adding funds more consistently.
Exactly. They're scaling up successful campaigns all year long. The result is that these sales, these upsell dollars, they get pulled forward. And that led to what the CFO called a much stronger than typical Q2.
But there's a trade-off, right?
There is a strategic one. It means that massive revenue spike they used to see in Q3 is now smoothed out across the year.
And that's where the traditional financial comparisons start to get really confusing, because if you smooth out that spike, a Q3 year-over-year comparison might look, deceptively weak, even if the overall business is healthier.
That's the absolute key point. An analyst who's looking for a huge Q3 beat based on the old trends might be disappointed, even though the company's annual revenue visibility is way up. Doximity had to basically say, look, don't measure us on the old quarter-to-quarter comparison.
So what should we measure them on then?
You have to look at the full calendar 2025 back half growth rate. That's up about 14% year over year. That's the real measure of their stability and momentum right now.
So they're sacrificing the big flashy beat for something more sustainable.
Exactly. They get consistency, they get better client retention because of the higher ROI, and they get far better predictability for their own business. It's a strategic choice. They're trading volatility for sustainability.
And the evidence is pretty irrefutable. 40% of their Q2 upsells came from these programs versus almost nothing the year before. That's a massive shift in just 12 months.
It really is. It speaks to the conviction their clients have in the data, which is the perfect transition, actually, to the engine that's driving all this, the AI platform.
Absolutely. The CEO, Jeffrey Tangney, was asked about the sheer scale of their AI investment. And his plan? Take it all the way. And the user metrics, they're just explosive.
It's rapid adoption across the board. I mean, their AI quarterly active users, the QAU, it grew 50% quarter on quarter.
50%.
And their ambient note-taking tool, Doximity Scribe, its user base nearly tripled compared to Q1. Physicians are clearly hungry for this stuff.
And that note-taking tool is so critical because it plugs right into their telehealth platform, Doximity Dialer, which is already everywhere. And dialer usage itself is up to over 300,000 voice and video visits on an average weekday. That's up from 200,000 they'd announced before.
Just think about that scale. That's 300,000 opportunities a day for Scribe to automate documentation. And they highlighted that this speed, this integration, it was made possible by their acquisition of Pathway.
Right. They integrated that in just 7 weeks, which is incredibly fast.
It's insane.
So let's talk product differentiation here, because this really gets at the biggest fear factor in clinical AI, which is hallucinations.
Yes. Unlike, a generic LLM that might pull information from anywhere, DocsGPT now has a fully integrated, peer-reviewed drug reference.
So a doctor can ask a complex question.
And the AI gives a fact-checked, peer-reviewed answer instantly, like in under a second.
So why can Doximity do this when other, huge tech companies struggle with medical accuracy?
It's because they own that trusted clinical connection. They have the physician base, and they're using very specific licensed proprietary data sets. The CEO was blunt about it. He said, anyone claiming their LLMs don't hallucinate is, quote, hallucinating themselves.
That's good.
Doximity is building trust by prioritizing verification over everything else. Because in medicine, speed is worthless without accuracy. That's their whole differentiator.
And they also tackled medical research access, another huge pain point.
Huge. Their partnership with Research Solutions, this is the big deal. It gives users direct, full-text PDF access to over 2,000 medical journals.
Including all the big ones?
All the top-tier journals. No paywalls, no library logins. Doctors don't just want 3 journals. They need access to everything.
And when you pull that all together, the drug reference, the journals, the note-taking, the value proposition is really simple. You're giving doctors back their time.
Which is perfectly captured by that quote they shared from a family medicine doctor.
Yeah.
He said, I just love Scribe. I saw 22 patients today till 5 p.m. and was out of the office by 5:15.
15 minutes. Unbelievable. Normally, that doctor is stuck doing paperwork until 8 o'clock or taking it home for that dreaded pajama time.
It's an immediate, tangible reduction in their administrative load. And that saved time. That is the strategic core of their AI plan. It keeps physician engagement sky high.
And that high engagement keeps the pharma ad clients coming back for those integrated programs.
It all connects.
So let's connect those dots back to sales. How does all this workflow innovation translate directly to that revenue optimization we talked about?
Well, the CEO sees this as the largest financial impact of AI right now. The AI isn't just a feature, it's an optimization engine. It works kind of like Google's PMax model.
Performance Maximum.
Right. A client commits a budget, and the AI is constantly testing and measuring, deciding on the fly whether to serve a video ad, a sponsored post, or an interactive tool, all based on what's yielding the best ROI for that client.
And the key to building that client conviction is the data transparency, which they get through the client portal. And those usage metrics are just staggering.
They really are. The number of quarterly active client users, so people at the pharma companies checking their dashboards, is up 3 times year on year.
3 times.
And this one is even more telling. The number of ROI studies Doximity is sharing with clients is up over 10 times what it was before the portal's full rollout.
10 times the data verification. That's why they're comfortable ditching the budget flush. They're seeing the value monthly, not just annually. You don't delay funding something you can see is working right now.
Absolutely not. And the CEO is so confident, He expects these AI-optimized programs to become the vast majority of our business over time. They're basically industrializing trust through data.
And that transparency is also unlocking new segments, like small, medium businesses. SMB customers saw roughly 100% year-over-year bookings growth.
Yeah, and that's fascinating because it's largely driven by their growing ecosystem of agency partners. These agencies use Doximity's free tools to serve their smaller pharma clients, which brings in business that Doximity might not have accessed directly.
Okay, let's shift gears for a second, away from the core pharma business. What's driving momentum in their other segments?
Health systems are a core strength. Their enterprise business, which includes things like the on-call scheduling tool, is one of their fastest-growing segments.
How many are they in?
They're in over 300 health systems, which is something like 45% of all U.S. physicians. And they're already selling their full AI Suite Scribe dialer into hospitals within the top 20 health systems in the country.
Which says a lot about the trust they've built, especially around HIPAA compliance and data.
It does. And beyond that, their recruiting business, Curative, was also strong. It was up 25% year-over-year in Q2. Physician recruiting is a very lucrative market.
Okay, let's circle back to policy. The analysts wanted to know about the regulatory landscape, specifically D2C advertising crackdowns and drug pricing.
Right, the uncertainty. Regarding direct-to-consumer advertising, there's definitely increased scrutiny. This is forcing some brands to rethink their strategies.
And Doximity sees that as a potential tailwind.
They do. The thinking is that D2C ad dollars are managed by totally different agencies than the ones handling healthcare provider channels. So if the consumer channels become less certain, those ad dollars might shift toward highly measurable platforms like Doximity.
Interesting. And what about drug pricing policies, like expanding access to GLP-1s for Medicare and Medicaid?
The company basically sees any policy that expands access as a net positive for the whole industry. It drives greater reach for their clients' drugs. It's still too early for that to impact 2026 budgets, but the feeling is that a healthier drug market ultimately encourages more strategic marketing spend toward physicians.
And zooming out, how do they look competitively?
Very strong. They confirm they're still growing at about 2 times the overall digital HTP market rate, which they estimate is in the 5 to 7% range. Their confidence really comes down to delivering superior measurable ROI.
So let's wrap up this deep dive. The most important takeaway isn't really about one quarter's revenue. It's about this long-term strategic evolution.
That's the whole story. Doximity is successfully transitioning its clients from a traditional, cyclical year-end sales pattern to a continuous data-optimized spending model.
They're willing to forego that quick hit from the budget flush.
In exchange for long-term consistency and value. They are aggressively investing their cash flow into AI with one goal in mind, to own the clinical workflow. And they're doing it by prioritizing the physician experience accuracy, efficiency over everything else.
And that focus on the physician's time, that's where the real disruptive potential is. I mean, we heard Doximity Scribe is now integrated into the dialer, which means ambient automatic note-taking is on the verge of handling over 300,000 calls a day.
And just consider the massive implication of that scale. What happens to medical efficiency, to burnout, to the quality of patient care, when the most tedious part of the job documentation can just be eliminated with a single tap? You're effectively giving hundreds of thousands of doctors hours of their time back every single week.
That's not just a feature.
No, that's a structural change to how healthcare is delivered.